This is Justin AMZN on Wednesday, September 25th, 2019. Uh, right out the gate, we were looking like we are going to have a hammer and a nice bounce off of 1747. But the very next candle took out that low, continued lower, really slamming into 1727.80, our next pivot that we were just talking about, and into this whatever this uptrend channel is. And I tried to figure out where it was coming from. I'm gonna leave it on here for now because we did come back into this price, but I can't find on a daily what we interacted with to make this channel, this line. So again, not sure where I had drawn it. Something with after hours or non-regular market hours, because I couldn't find anything on the daily that matched up with this in this time frame of October 30th to February 1st. So anyway, if you just have the 1727.80 price, that was really nice. We came down to that. It kind of looks like we made this kind of strange inverted head and shoulders that had like a double right shoulder, or basically it's some kind of consolidation here. Put in a really nice hammer, really large hammer right here, and you literally could have traded that bullish at this point. It would have been triggered in the very next candle. It pulled back into the candle's range, bounced again, pulled back again, started to bounce. But basically, this is a nice consolidation down here. Really held down by this the kind of low we ran into initially in the afternoon yesterday, and held that, and then we broke out from there. And from there, this sort of looks like a neckline. It's not a triangle, really. I mean, it's making some higher lows, but a flat top, but it doesn't really have that shape of a triangle. I mean, it does technically because it's a flat top and higher lows, but this doesn't scream triangle. And we didn't retest back down all the way to it, but you can see that this is a bit of an exhaustion on the bears, and really seeing this volume running right into a pivot, that spike in volume, and then a bit of a drop in volume as it looks like it's going to roll over. The 3-minute actually looks better in terms of this being a really strong bearish candle, and then it does moves bullish, or at least moves up very quickly after that spike in bearish volume. But anyway, this was really calling. All of this was really calling the bottom, and sometimes you can do that and it works, and sometimes you do that and it doesn't work, and you don't really have to do that in terms of getting into the right option and how you're going to trade it. And so after it breaks out, it runs up, it comes right back up into 1747, does this nice S curve. Even right here, you could be getting in bullish, looking for a continuation, because it's shown us after this consolidation down here, hey, we should have some retracement. And even yesterday I was talking about, hey, look, a run up into 1771, and I was off by a little bit. It made a high of 1773, not 1771. So I was off by $2, but I liked that I was looking at the previous levels, that pivot and the pivots here, and seeing, hey, it's reasonable to get up to this price. And sure enough, that's where we got to today on a retracement sort of move. So this open is the most bearish the whole day was. After this, and after these large bearish candles, they really quieted down. The bears couldn't really get it going, pushed down a little bit here, but even this was just a consolidation. This looks a little bit more of a triangle, with the 1747 price being the top of the triangle and this being some higher lows. Breaks out, retests on this candle, breaks out on the day, and this, if you ignore the 1747 and look at the high from the open and the high here and the high here, this looks like a little more of a triangle. It just consolidates better, and it retraces, retests right into that level. Even here, you could have been buying right off the 21, even have a stop further away below 1747, and then that just ripped higher. And so if we look at the calls, so the puts were a little more difficult. So here's the puts, 1725 puts, expiring Friday, had these really large moves. Not a really good place you could get some your risk reward placed properly. If we look at 1700 puts, it's a little better just because you're further away, Kind of hammer here, but this is still, 4x2, it's a $2 range. And I don't really want to go, excuse me, I don't really want to go further away from that or further out of the money just because I wasn't as confident of it selling off and going more bearish. I was looking for it to retrace more. And so this would have been getting in like a 2 and getting out at 4, which could have worked. But look at the volume, there's just no volume here. A little bit here, a little bit yesterday, but just not a lot. It's just really far away at this point. So if we go back and look, look at the calls, here's the 1750 calls. They come in that $10 price, and you get that hammer here, and yeah, it's got a much wider range. But once you pull into this 10, I mean, the range starts to tighten up a little bit. And I'm not saying this would have really worked just because this still would have been 10 by 8. But I just want to show that there's a lot more volume here on the bullish side, and you can see these patterns. This is a consolidation, like a triple bottom. It retraces over here back down into this low, so that would have been buying at like 12, but waiting to get in. And then this would have been buying at 14, like 14 by 13 would have worked over here. And this is where it was bouncing off the 21. It was already showing, okay, it's going bullish, wait for a retest, going bullish. And this would have been a great entry here, 14 by 13, and that just ran. And you easily could have exited, 1771 price would have been right around probably 24, 25, something there. And it even ran up to 27. So that's getting in at 14, getting out at 26, that's 12R. Or let's go a little further, 1775 calls expiring this week. And you have, it's only another $25 out of the money, which doesn't seem like it's that far away, but look at the cost here. We were down, putting a low around 263 here, buying 3 by 2 anywhere in this low, or waiting for it to break out, retest, still got under 350. It was playing into the highs a little bit more, so 350 by 250. And then even this price right here, as it pulled back into the 21, was relatively the same as the high here, pretty close. So would have paid up a little bit more, but I mean, you're buying 4 by 3 here. You could have done that here, 4 by 3. This is waiting. This is watching it go in the direction, waiting for it to pull back into the price, waiting for it to retest. Even this, buying 4 by 3, you're still risking $100. You're still risking the same amount. And because it's getting that stronger move into 1771, it's still moving nicely. Obviously, you're not going to get as many R's, but you could have gone from 4 up to 8 or 9, even touched 10, which would have been more than a double. So, from 4 up to, let's say, 9, that's 5R. You're paying way less, paying $4 instead of 14, $1,000 less that you're paying out for this option. And you're much more comfortable with, even if it does pull back, by 50. Okay, we put in a low over here. That's understandable if it does that. Even getting in here, buying 4 by 3 over here should have worked. And then you're just waiting. Could have scalped it out for an R up here at 5. But okay, it's pulling back. All right, I'm down a little bit, which is never a good thing psychologically. It's like, okay, I was up, now I'm down, but then it gets going, and it plays along really well with where the chart was. Where the 5-minute was pulling back and then bouncing, and you can even look at other options too. So let's do 1775 or 1770. Excuse me. This one still had a good amount of volume. It was a little more expensive, but not by much. This was buying 5 by 4, this 5 by 4, same sort of thing. This just moved a little bit closer or moved a little further because it actually got in the money by a bit. And so could have gotten in this one, $5 by $4, and held on to that till it got to like 11. So that's 6R on that move, a little bit better. And this one, I like how this price pulled back right into the high here. So this was $5, this was $5. This pulled a little deeper, which just shows you that the market makers were trying to just pull that premium out and hit some stops. So this was a breakout. People were buying on this breakout. They were getting stopped out or trailed out over here. It did it again, and then it actually ran. And I'm sure some folks were thinking, was going to say maybe some sort of double top here, but it held that pretty well. It didn't really show a signal of going lower. But you've got higher lows and higher highs in the day, and it just makes sense to continue taking in that direction. So where are we now? This is a good place to roll over. It's a really good place to roll over. If we have some more bullishness, or we can continue moving up, I'm going to start to get that feeling we really shouldn't be that high. Like if we get back up to 1800, I'm going to get that feeling we really shouldn't be this high. It's honestly a great place to bounce, but it's a better place to roll over. I like how we broke the 1747 price. The exponential moving averages here are pointed downward. We lost all that bullish momentum here. I guess I'm not 100% convinced it's rolling over. It's a really good place for it to roll over. I could see it retrace a little bit more. Like I said, it should hold a level up here around 1800. I guess I'm saying I don't think it'll get above 1800. I think it'll hold that. We'll stay below that, and we may consolidate a little bit and then roll over. But I'd like to see it do that tomorrow. Let's see, Thursday or Friday this week is to get going bearish, get into the low 1700s, even past 1700 this week. And I think that's just going to be really telling that we're going to be in a bigger decline here. But we'll see. We had a really nice retracement today. It looks like any of these other bounces, you got lots of bulls coming in, but it's the volume. The volume is lower than these two bearish spikes here. And then this one breaking down, then this one breaking down. These are just small retracements. And let's see, we had the volume spike on this one, then bounced. We've had two volume spikes pretty much back to back with a little retracement in between. This just looks like it's got more bearishness to come. So I think the next place is to take out this low. I think that's the next target, is to get back into 1665.27. I see that as the next target down here, but I don't know if we'll get that this week. That might be next week into October, which is crazy to think about. It's almost October, but a little bit of a sell-off before a Santa rally or something, totally possible. But yeah, if we get too high here, I mean, even the 21, if we can touch the 21, that's 1803. It'll come down a little bit more tomorrow. If we touch 1800, that's a great place for this to roll over. And we definitely didn't get the bouncing that we got back here, where we didn't get a rally. We didn't get, let's see, was it here? Yeah, where I was saying if we had a gap up, so we had the bearish candle and then a gap down that faded. So bearish candle, gap down that faded. And then we had a gap up, but it didn't go up, it went down. So it doesn't really look like this. It looks like we're below this. Like we've got a bearish candle that now has retraced some. And we're kind of at this point, we're retesting the lows here. And that's what we did today. We retested a little further. Where we opened up was kind of on par with this price and these lows right around 1747. But I think that's going to pull more bulls in and then roll over. And it may roll over next week then. So we'll just have to wait and see. But that's kind of what this is showing me, or what I'm seeing in the candles and where things could go. If we from here break higher, great. I mean, it should continue bullish, but we've just had a really hard time getting into the high, the upper 1850 or above 1850, really. We got into, let's see, 1853.66, 1850 on the dot. Yeah, just getting into the upper 1800s has been tough. So that's going to be a really strong resistance. If somehow we get there, it'd be opposite of this, where it's like we shouldn't be up this high and then roll over. And that'd be even stronger from there. It'd be totally opposite of like this sort of move, It's like, okay, we totally broke down, and then we rallied, and then we collapsed. Instead of, hey, we're rallying. Oh, no, now we're going down. Now we're rallying really hard. So anyway, hope that makes sense. Hope this helps, and be back for more soon. Hope you enjoyed this. This is just AMZN. Thanks.